And you can take advantage, like you said, all these weird, strange global events, which seem to be happening every week now. Well, things getting bombed and oil prices and elections in the Middle East and threats of war and new presidents and, people talking about universal basic incomes and it's crazy. And this is a way, I guess, of taking advantage of those big moves.
Well, right. And also, what we do is we watch for the impact of those moves on all of that market, that pre-market activity, before the sharks set out throughout the world. So starting in Asia to Europe and the UK and then on to the US, and how things, events actually manifest depending on when they happen. Depending on whether it's an oil event that happens, on a Sunday in the Middle East, and then it goes into what happens at the night in Asia, and then in the morning in Europe, and so forth. There's also a lot of time. We're in a big world now, where information is instantaneous, but not every market is opened all the time still. And so therefore you can see these patterns, these trends happening and building up as certain events take place, and then how they actually ultimately get into what we specifically look at, which is the US market open. But after all of those other international markets have potentially been opened and been showing us trends and patterns relative to all these events. And the markets today really do operate much more on these knee-jerk events and processing them and the psychology of processing them than they did when I was on Wall Street and maybe also when you were on in banking, because it's it's much more emotional. What markets do. It's no longer, well, this company's good and they have a good long-term plan and they have, good term money versus, the debts that they have, and they treat their employees well and all of these things. That's a part of the financial system, but it's also very much like what just happened 2 hours ago. And that's a very new phenomenon, which we do incorporate into the 25-cent trader model, but also in general that I've been looking at very particularly in the last couple of years, as
understanding
markets have
that
changed.
emotion.
Yeah.
Okay. And there's a whole lot of rocket science going on in what you do, right? Because you have this you look at all these different indicators, but you end up telling people with a green light or a red light, buy this or don't buy this. So that way you do all the number crunching and all the complicated stuff. Is that right? Yeah,
no, that's right. And even to the last moment when we issue a trade, we are looking at that green light. We're looking at what's happening right now, where those sharks are, what the pre-market trading looks like, to even make that final decision as to whether or not we see that green or whether or not we think, it's just a light green, it's a little yellow, maybe not, and not necessarily put out a trade if that's the case.
Wow, so it's the minutes up till 9:59.
Yeah.
And you're seeing if everything's in place. If it is, you say green. If it's not, you said let's wait another day.
Right. Or even if that builds up earlier from the 9:30 when the market opens, we're literally watching that that whole period of time.
And then at 10 o'clock you go off to the gym, go do something else. You're done by 10.
Well, that's exactly right, because after that period is when all the major volume happens in the market. And even if it happens some event occurs at 2 p.m., at that moment, we're actually not involved in that trade at that moment, or in a new trade at that moment, because we still feel, even if looking at various patterns and how the market reacts to even news coming out in the afternoon, the real acute behavior is still in the morning. And so even if something might present itself in the afternoon, just in terms of all our analysis and statistics, we don't feel it's going to have the same opportunity as what happens in the morning.
Yeah, that makes sense. And I remember the after hours trading and all the things they would do, and people don't know that's happening with all these institutions. So having someone on the inside to understand that is super helpful for regular investors. Yeah. So no, it's a really exciting product, really interesting. So people want to learn more about it, londonreal.tv/Nomi. There's a link below. And again, you walk through the whole strategy behind it and how people can take advantage of it.
That's right.
I wanted to take you back to a day where we were both in New York City. And the reason I want to ask you about this day is because I think
I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy. designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's Nomi, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best sort of protect that investment for those risks? And so that's what they're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way.